Hello traders around the world. Here is a quick guide on how to use the cup and handle chart formation in Forex trading. The strategy was popularized by William J. O'Neill in his book How to Make Money in Stocks. However, this pattern can also be used in Forex trading charts. The most important thing is to understand the basics, and then following the rules and apply it, you make more returns on your trading. First, we start with the cup itself, and how does it look like? This is just a pattern that you will see on the chart that would be something like this. Usually forms in an uptrend. You will see something like this. Then you see with a handle formation, the U shape is the cup. Then let's do this. Then it has something maybe similar but small. Okay. I'll adjust it. So this is usually how the patterns look. It could be this. Then where this forms the cup, not in this perfect shape, but this forms the cup, and then this forms the handle. So I would show you how to identify this pattern. The formation, as I said, usually form after a bullish trend. You have a bullish trend, then followed by a period of consolidation. The consolidation is usually this one, where the price dips. You had a run. Let me move this up a little. Yeah, you have this, and let's assume you had a run of this nature. Sorry, and then let me stop here. So that takes it. So you had a bullish run, and then all of a sudden you see a formation that looks like this. I could also this, in a real life situation, you might not have it perfect, but you might have something that looks like this. Okay, then after this again you have another dip. So this is, let me stop this one here. So this is usually the situation. You will have the charts. First of all, first thing you look out for is that you had a bullish trend. A bullish trend usually forms when you have an uptrend breakout. Okay, you have a bullish trend, then followed by a dip. I'll give you the rules for measuring this. You have a dip that looks like that is cup shaped. So the rule is that this shape, this dip here, should not be more than 50% of this run. If I calculate, for example, I'll use this to mark, let's say from here to here. This is the length. This is the full length of the uptrend. So it should not be more than 50%. 50% is half of this, right? So it's usually between 30 to 50%. 30 to, let's say this is half of this. Then if we take another angle, we could say that if you break this into 3 equal space, this is 30% thereabout. So in the uptrend, for the cup to form, you would have within this period, that is, if it's because it could be that the uptrend has not finished. So what you look out for is that if the return is above 50%, then you would know that okay, there is a formation, there is a retracement here. Now there are two way of getting this. You can use the just look at it with your naked eye and pick that, oh, a formation is happening, or you use the Fibonacci retracement tool, where you take the measurement from the lower part of the trend to the upper part of the trend. Okay, let me reverse this. You take it from the lower part of the trend to the upper part of the trend, then it gives you a reading where it should fall below, within the 50%. If you see, this is 50% line, this green line. So if I take out this, if I take out the lines I formed before for us to use the Fibonacci, we have explained this tool before, the accuracy, the history around the use of Fibonacci, and a Fibonacci tool to make pattern analysis, chart analysis. So from here, you look at, this is the 50% line, 30 would be around here. So between, what we say is that between this point and this point, if you have a pullback here, and then this is the first one, this is within 50%, the next thing you look out for is you look out for a round formation of that pullback. I will show you, and we will try to find a matching example of this within the charts. Then after this, there will be another pullback. Again, what we can read here is that it's more like a double top. Then you have another pullback. This second pullback will not be as deep as the cup itself. Okay, then it goes back again. So when it goes back, then at the point, at the rim of this cup, of the cup itself, that is where you begin to, that's where you look for the confirmation that yes, it's actually a cup and handle. So this is the cup. This second dip is during this consolidation, this dip here is the confirmation, but this main confirmation is when it breaks above this line. So which means the first when the first bullish trend run up to 100 here, it pulled back to 50, for example, between 30 to 50, it returned back to 100, it dipped again. As soon as it breaks this 100 line, then that confirms to you that you now have a cup and handle formation and the breakout has occurred. The last thing you look out for is that during this point that it's crossing here, check the volume of trade. If there is high volume, that is the high volume of trade here corresponding to this, then it's a good point for you to enter the market. Now, when you enter this market, Forex trading is all about risk, right? You wait for the confirmation. Don't, because you see the cup, you see the handle forming, don't jump, don't be faster than this. What you need to do, wait for that confirmation, and the confirmation is that it breaks above this line, one, and secondly, you confirm that there is volume, so that it's not a fake breakout. However, in risk management, you need to, for every trade, you need to actually have a stop loss defined. So where do we put our stop loss in this case? There are two things. If you want to be aggressive, you put your stop loss below the handle, but to be more conservative, you have to put it below the cup itself. And again, you should know the rules. You should know the rules of setting stop losses. That is, what is how much, what is your lot size, what is your leverage, and during the dip, how much is going to impact you. This is very important for you to calculate, so that you don't make a mistake when you place the order. It will come, hit your stop loss, then go where you're actually looking at it to go before. Now, how do you set your take profit? It's not just about putting a stop loss. You also need to put a realistic take profit. The take profit would usually be the depth of this cup itself. When it comes down here, we will take, let's see, where is my, okay, let's take this. For example, I enter the market at this breaking point. So as I said, you either place your stop loss below this or you place it below this. So if I place it below this, it's actually going to be ratio 1-to-1. I have to make it ratio 1-to-1. My take profit will be this. Okay, this is my first take profit. But otherwise, if I'm placing it below the cup handle, in this case is ratio 1-to-2. So this is it. But to be more conservative, you do 1-to-1, and this is your first take profit. We did not say that it could not go even 1-to-4. It could, but this is, as I said, is to show you how to use this and then applying it in your trade as part of your trading tools. Now, one other guide you need to look out for is that this should happen in the higher time frame, and the tips for you to confirm is that, first of all, check this across multiple time frame. It forms in the higher time frame. Look for validation in other time frame. For example, I'm currently in the weekly time frame. If I see if the U pattern forms here, sorry, the cup pattern, if it forms anywhere on this, I need some other validations. Okay, I need other validations for me to across other time frame for me to pick my entry point. Okay, this is one. Then secondly, you need some other complementary analysis. What I have done, I put the Fibonacci retracement there. It's a complementary tool, because already we also know that when naturally, if it retraces to 50%, it could come down as low as 38. Okay, then from here it goes back. But when it breaks the 0.382, you know that, okay, this is not the trend has changed. Then you also have the what is it called? You have the moving averages. You can use the 200 exponential moving average as your confirmation. Then, and most importantly, make sure you practice and backtest across different currency pairs, different time frame, just for you to master the use of the tool. Okay, so this is the summary of it. We can look for one example within the chart to see how we can apply this tool. First of all, I said the first rule is to check, look for an uptrend. Okay, you have an uptrend, then look for the U. Once you get the U, the rules is that the U must not go below 50% of the uptrend. Then look for a dip for the formation of the, it could do sideways formation. The handle could do sideways formation, and sometimes it could actually form a small hand like stuff. And the confirmation is that you should look out for volume, that there is volume at the point of entry, and also there is a breakout above the rim of the cup, When that happens, you take your entry, and you take your stop loss should be below the, your stop loss should be below the cup handle itself, or below the cup itself, to be more conservative. And your take profit is the length, the depth of the cup that formed. So let's look on the chart and see if we can get something of that nature. Okay, now this is on the daily time frame. Okay, I think I could actually use this current. This is XAU USD. Now cancel my friend, what's happening? Okay, here we had an uptrend here. We could say we had a U formation here, but this is not complete. This is not complete. Let me go backward a little more. And we could also use, the main thing is that do your first check on the upper time frame, because it's usually top down analysis. If you pick it up in the upper time frame, then you can look for lower, go to the lower time frame for entry confirmation. But for the purpose of just analysis, I will step down to where we could have multiple chart formations that is easy for us to see pattern. So I'm moving down to 1 minute time frame, then we look for an uptrend there to confirm what we're looking for. Come on. Okay. Oh, that's almost one. I lost that. I see. Again, when you don't see it, don't force it. If you force it, then it could hurt you. So the rules must be satisfied. Look for an uptrend, then the U formation, the breakout, confirmation, then your stop loss and your take profit target. If you set it that way, it will be beneficial for you. Then the other way round, because everything I have discussed now, I mentioned it in the uptrend. You could also find this in the downtrend. How do you spot cup and handle in the downtrend? Again, is the reverse of exactly what we just explained. You will have a downtrend, then you during the downtrend you had a pullback. The pullback formed the cup, okay, good. This is let's look at this. I'll use the reverse to explain it now. If you see here, there is a downtrend form. After this, you have a downtrend happening here, right? So on this downtrend, let's look at this, because this is a U shape. Where is my Fibonacci? I pick the Fibonacci from here to here. This is the downtrend. Then this formed. First of all, let me put that in the shape that will clearly show us the formation. Okay, I'll adjust it. I'll use this example alone. Now we have this. Okay, usually what I do for easy fixing is to use the line. So I do this. Now what is important here is that, look at this, it's touching the cup for me. Then I have another small one here, this, then this. So this has formed. What do I need to check now? I need to check the 50% of this. Now let's return it to the chart graph itself. Okay, from here to this point, to check the 50%, if you look at it, this is my 50%, correct? So this formation did not break the 50%. Now the next thing is that after this cup shape, I have this coming up again. Now this one that came up is forming the handle. It's a dip. This dip is forming the handle, yet it did not go beyond this. So what we said is that for us to enter this market, we wait for a break of this cup rim. Now I will use this to denote the cup rim. The cup is from here to here. Now if once it breaks this line, I will take my entry. Okay, now breaking this line, if you also watch our previous video where we talk about entry and exit strategy, when we have a break, we usually wait for confirmation of that break. Okay, we wait for the confirmation of that break, and after that we take our trade. So here there is, it breaks here, it confirmed here. Okay, now what we said is that you should take the depth of the cup, the depth of the cup as your take profit. If I do this, because I want to set up a sell position, if I do this here, this is the breaking point here. I put a break here. This is the depth, this is where it got to. So I'll bring this down a little. This is the depth. Okay, so my stop loss, I'll move it a little above the cup handle. Now the take profit will be the length from here. Let me set the take profit before I adjust that. So the take profit will be 1. I want it as 1. This is 0. This is 99. This is 1. So I can actually adjust this above this, and we said to be more conservative, you take it here above the main cup. Now if you see this trade, after the confirm, there was a break here, it came back to confirm, and it actually came to hit the take profit. It might be a small one, right? But this is how the first line you look at is, this is the length, this is the run of this is the market trend, this is in the downward trend. What I'm looking for the upward break that has the U formation, but this is exactly how it is in the opposite direction. Okay, that is one. Here this fails, we don't have it here. If I can get one for uptrend, it's not here. 50%, it's not there. So this is it. What happened is, okay, there is one here. No, it didn't form. Rather the shape that formed here is a different pattern. So in the tips, just to conclude, in the tips I gave, I made it the point 3 on the tips is that you should practice back testing. Just for the interest of time, we will not take more than this. Go through listen to the video again, and go through the analysis to learn how to use cup and handle pattern to determine when to enter a trade and when not to enter a trade. So if you are yet to subscribe to this channel, kindly do so, and also share to others to benefit if you enjoyed the video. And doing this would encourage us to do more free videos on this channel for the benefit of all. Thank you very much. Hit the subscribe button, hit the like button if you already subscribed, and then see you in our next video. Thank you.